Hi, this is Tom Soane and welcome to another drive-by episode of the Anonymous Landlord, because these are the things that I think about on my way to the office in the daylight for a nice change. Normally it's dark when I come to the office, so it's a nice change to be coming in the sunshine. Still cold, but sunshine. Anyway, today I think you're going to get double bubble. I think if you're a business owner and you're a property investor, or you want to be a property investor, then you're going to get double lesson here, which will translate from business to property and property to business. If you are just one or the other, then you hopefully are going to get the lesson that I want to get across to you today. And that lesson is actually a business lesson which is translatable over to property. And if you can learn this lesson, it really is a good one to learn. Brilliant for making profit. And it's a bit of a formula, because quite often a lot of people, when they're investing in property, will look at purchase price, purchase value, etc., all the upfront costs, and then they'll work out what they can get out of it at the end, right? Fine. Whereas in business, people do the same thing. And so I'm going to teach this as a business lesson and then translate it into property, right? So, did you know, by the way, half of all businesses fail in the first 5 years? And apparently something like 80% of all businesses don't make profit. That's crazy. That's absolutely crazy. So, what we're going to do is make profit. And that's whether you're in business or in property or both. And it's a pretty simple formula. It starts with profit. And I want you to think of it like this. Normally, you would think of a business as revenue, you set targets to generate some revenue or income, to then pay your bills and expenses, to then make some profit, right? So that's generally a way that I'd say most business owners would set out their businesses. They'll start with a target, then they'll generate revenue to achieve that target, then they'll be able to pay their bills and expenses, and then hopefully there's some left over and you make a bit of profit. And it's the same in property. A lot of people will start out with a budget. They'll start out with, I don't want to spend any more than 150,000 on a property. So then you'll go onto Rightmove and you'll search for properties up to 150,000. You'll search, 2-bed, 3-bed houses, whatever it may be. And then that's what you start trying to buy. So that's probably where I think a lot of investors not necessarily fail, but could do better. And it's the same in business. You could do better than that formula. So what we're going to do is flip it the other way around. And we'll start with business, because in business, what you really should do is set out what profit you want to make. So for an example, if you want to make £20,000 profit this year, that's when you can work out, okay, how much do I need to generate to cover the bills on top of that? So you've got £20,000 profit, but you've got £80,000 of bills. So you now know you need to generate £100,000 of revenue, which means your target is set at £100,000. You'd probably want to set the target at a little bit more to try and overachieve. But, generally speaking, you'll set your target based on the profit you want to make. And I hope that makes sense. And if you're in business, then please let me know. This is I'm simplifying this. There are many formulas and calculations and strategies that, I could talk to you for hours about business strategy and profits and loss and assets and liabilities and, director equities or owner equities, stuff like that, for ages, on how to improve profits and decrease expenditure and increase assets and decrease liabilities and blah, 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 blah. But today we're just talking the basics of the formula. So yeah. So that's a basic business rule, and you know what, if you can follow that, then awesome. You should make profit unless you don't pour it in the top, meaning if you don't generate the revenue, obviously you're not going to generate the profit. But set your profit first, then add your expenses. That will give you the amount of revenue you need to achieve to make that profit and to pay your bills, and then that can give you the figure you need to set your target for the year. And it's the same in property. Here we go, translating it now into, if you're going to do, and I'm going to do, by the way, I'm going to talk about a flip if you want to do a flip, and I'm going to talk about a, well, I call it a flip to let. Some people call it a buy, refurbish, refinance. Some people call it, or you could do a straight buy to let. So you get where I'm going with this. So let's put it into real terms. If you are doing a flip and you want to make £20,000 of profit, then you now need to work out what you need to spend in order to achieve £20,000 of profit. Now, you'll do that a number of different ways with property, in that you'll start scrolling through Rightmove, talking to agents, dealing with sourcing agents, talking to property brokers like me. That's what I do most days. I run my business and grow my business, but I'm also a property broker. It's a bit of fun on the side for me. But yeah, so dealing with sourcers and brokers and estate agents, auctions, you can now see which property is going to generate you that £20,000 of profit if you flip it and sell it. And that will give you the figure that you can spend. Now, yes, there are some factors involved. You might be limited on the amount of mortgage you can borrow. However, if it's an investment purchase, then the lender will more so be looking at the investment you're buying. You know, what the criteria is for that, not necessarily say to you, right, you can borrow up to 150,000. That's normally in residential mortgages. If you're buying a property to live in, the mortgage lender will say to you, yes, you can borrow up to 150,000 based on your personal circumstances. But with an investment property, they will normally base it on the property itself. So remember that. That's an important thing to remember. What it means is that you go after the profit first. You calculate the profit you need to make. So, and you can work that a number of ways. You can say, I've got, £60,000 in my bank, and I want to make £20,000 profit on a flip to sell. So now that gives you the exact idea of, I need to put down a 25% deposit, legal fees, sourcing fees, auction fees, broker fees, selling fees, all of those things, add that, and then also that will give you the, you're going to put down 25%, right? So you're going to borrow 75% of the purchase price as well. So that will show you what property value you can buy. I hope that makes sense. Sometimes it's difficult talking about these numbers when, it's going to be if a verbal thing, it's easier to see it written down, but certainly I hope it helps anyway. But what I guess I'm getting at is that start with the end in mind. If you want to make 20,000, if you've got 60 grand in your bank, cash sitting there right now, think to yourself, what profit do you want to make on that £60,000? If that's £20,000, brilliant, work backwards from there. Now, of course, there are tons of formulas and calculations and strategies within that. I'm not trying to make it sound too simple. And there are brilliant strategies you can follow to achieve that. If you've got 60 grand now and you want to make 20 grand profit, easy. Actually book a call with me. If you want to find out how, book a call with me. It's free. Just send me an email, tom@pinkstreet.co.uk, or comment below and I'll message you, or you can message me through Facebook. Just ask for a discovery call and I'll tell you how it's done. But work that way. I want to make 20 grand in profit. Right. What do I need to do to generate £20,000 in profit? That's the way to think about it. And that's the same in business. It's the same in property. It's the same in investing, in everything. If you work out how much profit you want to make, and then you work backwards and figure out what do you need to do to get to that profit margin. That's the best way to run a business. It's the best way to buy property. Start with the end in mind. I hope that helps, and as always, that should make you a better investor and hopefully a better business person. My name's Tom Soane, and this is the Anonymous Landlord.